Good morning. My name is Christi Bryant. I'm a realtor here on Outer Banks with KWOBX. I'm here this morning with Jason Hanson with OBX Mortgage, and we're going to talk about interest rates and what we're seeing coming forward. Good morning, Jason.
Good morning, Christy. Thank you so much for having me. Yeah, interest rates are the hot topic as always. There's some movement in interest rates over the next coming days, over the next coming months and years. So I figured we could just do a little bit of a deep dive into what to expect. Coming up, we've got the Fed is going to meet in November, and it is really up in the air as to whether they're going to hold on raising rates or raise rates again. And they're basing that off of inflation data, and particularly the CPI, which is the Consumer Price Index. The CPI came out on October 12th for the month of September, so they put the data out in arrears. And the inflation rate came back at 3.7%, which is flat compared to the prior month. So August data came out in September at 3.7%. So what that equates to is inflation hasn't dropped this month, which means interest rates have reacted in a negative way. They've gone up. Okay. So rates are trickling up, and the Fed there's multiple standpoints. The Fed is saying, hey, I think we've raised rates enough. It may be time to stop raising rates and hold. So they're not going to drop rates anytime soon, but they may hold. They also are saying, oh, the inflation rate isn't down as far as we want it to be. Their goal is 2%. So we're at 3.7% still. So they may raise rates again. But that'll be the last time for the end of the year if they're going to raise rates. And then moving into next year, all the forecasts point to them going into a holding pattern. And so what that means is they're going to stop raising rates. And when that happens, we will see rates, stay very level, but as the inflation rate continues to dip, if it dips, we will see rates gradually go down. Fannie Mae has one of the most accurate rate predictions historically. And they're predicting that rates stay. So right now, the average mortgage rate is around a 7.6. That's across the board average rate that a consumer's getting. Fannie Mae is saying that it's going to stay pretty much around that level until around the second to third quarter of next year. And at that point, we'll see rates start to go down. And they're predicting a low to mid 6% by the end of 2024. So we should see rates start to dip over the course of next year. We probably won't see that happen until middle of next year. And then beyond that, it's going to depend on the policies that, we got a presidential election. Historically, rates do go down during a presidential election year. So that's another reason why we should see rates kind of trickle down. And then whatever policies become enacted through the presidential election, whoever gets, enacted into office, we'll see more movement based on that. But most likely we'll see rates continue to go down over the next couple years. And so when we talk about that, the biggest piece, so typically when rates go down, we have an influx of inventory. That's another driver. So housing inventory, driver for rates to go down. But I don't think we're going to be seeing that because so many people have a low interest rate from the COVID years, right? So there's a lot of people with 2.5% interest rates. And so if rates go down to, say, a 5%, that's still double interest rate than they have on their current home. That equates to hundreds and hundreds of dollars a month. So we probably will not see those people sell even if rates go down a bit, which means that we won't see an influx of inventory. And when rates do go down, that we will see an increase in demand, which will drive the price of homes. Right. So anybody that's buying right now is going to accept the higher interest rate now. But in the next couple of years, their property value is going to go up because as interest rates go down, more and more people will be bidding on these properties, which is going to drive the price up. So anybody that's buying now is going to gain a bunch of equity in the next couple of years. And then they're going to have the opportunity to refinance as well. So the people that are purchasing now are kind of in a win-win for down the line, with one loss that is accepting a little bit of a higher payment for now. But they're going to gain the equity and gain the lower interest rate when they can refinance.
This is good stuff. Thank you very much.
Yeah, of course.
I appreciate doing this. We're here, at the, middle of October of 2023, and looking that right now really is a good time to be buying property.
It is, yeah. You're actually making the smart move of getting it at the lower price with less competition than you will in a couple years, and by that time you'll have equity gained and the ability to take advantage of the lower rates when they come.
Awesome. Well, thank you, Jason. I appreciate this.
Thanks
This
for
was
having
good
me.
stuff.
I appreciate it.
I am Christi Bryant, Realtor here with KWOBX, and I service from Corolla to Ocracoke, and always here to help you. And Jason is always available. Jason, how somebody get up with you if they've got questions?
Yep, you can find me at the Keller Williams office. You can also call me at 252-216-9037. I serve all of North Carolina. I have a wide range of products, over 100 products, everything from first-time home buyer to seasoned investor products with very competitive rates. So please do not hesitate to reach out. I would love to help you.
Jason is awesome. As always, thank you. And we look forward to having more conversations. Thank you.
Thanks, Christy.